Hey everybody, it's the weekend as we head into June week 3, 2019, and the Fed statement and press conference with Powell on Wednesday of this coming week. It's week 3 monthly OPEX, so the S&P 500 regular monthly June options, they will only trade through Thursday's close and they will expire with the average open on Friday morning. There is a blog article explaining that in more detail if you're new to trading S&P 500 options and you aren't aware of this anomaly and this weird way that S&P 500 expires. Okay, this is our fully noted roadmap chart. This little purple bar here represents this 2892 area that we can't seem to break on past. And this purple bar down here that I've added marks this area where we used to hold support at 2801 before breaking it as we got into the final 2 trading days of May. And so right now this really sort of blocks in an overall trading range that we are under right now. So from 2800, 2801 up into this 2892 level. 2892 originates from these 2 candles here, these 2 bounce attempts that were made on May 10th and on May 16th. On May 10th, we bounced to 2890. On May 16th, we bounced to 2892.15 for a look above here, but then we couldn't, something came out, I can't remember why, but for whatever reason, we started rolling over the next day, and then that was it. We sold off down to 27.28 from there. So now as we come back to it, we've traded above this level a few times, but they will not close above it. Even here on Thursday, we had that obnoxious little 10-point move in the final 60 seconds of the day that took us up to a high at 28.95, but then they peeled it back to close just a tiny bit below that 28.92.15 level. Our close was 28.91.64, less than a point, about a half point off. So there's obviously something going on that they don't want to close above this, and it probably has to do with funds keeping on short call bets until they get some either closer to the Fed or some kind of inkling that the Fed is going to remove the word patience, from the Fed statement, and maybe talk about the possibility and actually put into this at a rate cut soon. Okay, so there's clearly something going on here with that 2892 level. And what's kind of interesting too is that the last time we closed above 2892 was all the way over here on May 6th. See, here's May 6th, here's May 7th, our close was all the way down here, and you can see we never got a close back above this 2892 level again. What is significant about May 6th? Well, that's this gap that we've got next to fill overhead. That close was 2932. That is this gigantic unfilled gap that's right ahead of us, running from 2913 to 2932. So I think that's kind of interesting. I think there is something to be said about this level. It's somewhat tied into this 2932, and I have been saying now for a couple of weeks that if we could just get a close above this 2892, I think that will be a signal that we're going to go ahead and fill that gap. And if we fill this gap, we're definitely going on for a new all-time high. Okay? If the Fed does not give us what we want to here, then we have a clear line in the sand down below us here with the 50-day simple moving average. Our low for the week last week got down to 28.74. You can see for a nice little test of the 50-day simple moving average. And if the word patience is not removed from the statement when that statement comes out on Wednesday, you will know it because we will just break this 50-day simple moving average. We will be down here, and we will be down here at 28.43, filling this gap down here below us in no time. It'll happen that afternoon. Okay, so if we want to look at some further downside possibilities in case we are disappointed by the Fed, we have that 28.43 level that I just mentioned to you, which is an unfilled gap. We have the halfway back for the whole quarter right there. Okay, and our quarter consists of this all-time high and then our June swing low that we made here down at 27.28. So the midpoint there is right here at this gap. So we will come right down to here, assess what's going on. Maybe we would even hold it for the press conference and then wait to see if he answers questions the way the market wants to hear. And if he does, then maybe we would work our way on back up and we would be back on 28.92 watch. But if he plays hard ass at the press conference, like we've seen him do before, they are just going to break this, and we are going to be working our way all the way back to back test this low that we made at the beginning of June. There's a huge gap down here that we need to fill. If that's all that they want to do, is maybe break down through the 200-day and fill this gap over the course of the rest of the week as we get into monthly expiration, then fine. Maybe we're just going to, turn around from off of there and everything will be fine. But if we are going to break even lower and break our June low, we still had a little unfilled gap that we did not take care of when we came in. When we came into the month to begin with, it really looks like that's where this low was headed, was to fill in this gap at 27.09. That goes all the way back here to this close here on February 11th. Okay, we would fill that gap, and then right below that we have the whole halfway back for the year. The whole year 2019 is at 26.99. So ultimately that would be a test of 2700. And then, of course, if we break 2700, we go into our 80 handle rule mode, where we're looking at a back test of the February low at 2680, and then we're looking at a test of the January breakout point at 2668. Okay, now if we're gonna get what we want to hear from the Fed, and we're gonna go up after the press conference, then obviously we're going to be closing that day above 28.92. In fact, I'm sure that if they take the word patience out of the statement, we're probably going to trade right up into this gap, hold it there, and then get our reassurance from Powell through the press conference. And if the market gets the reassurance that they want, we're going to fill this gap on Wednesday, and we're going to start trading up towards a new all-time high going into monthly OPEX for Thursday, Friday. If we start trading up towards a new all-time high, our first stop is going to be this 29.6125 unresolved level from ES that printed on the same day that we made our S&P 500 all-time high. What happened is that ES rallied up to here, pulled back before the bell opened, and then once the market opened, this is as high as the market could get, 29.5413, before peeling back and selling off. So we never printed that level along with ES in the light of day. It happened when the market wasn't open. So that needs to get resolved. We have a new contract right now, so it's going to be, there's going to be a spread. Friday, the spread was still at 5 points. Maybe by the time this level gets resolved, that spread shrinks a little bit. But if the spread were not resolved at all, if it was still trading 5 points, then S&P is only going to get up to a slight bit higher than 29.54. Because you subtract 5 points off of this 29.61, you get like 29.56 and change. So that would be, what you'd see on the S&P for a nominal new high. ES would print 29.61 in the light of day. Everything would be resolved, and then it's kind of like a clean slate, and then we see where we go from there. Anyway, our first couple of new levels and targets that we should be looking at is, once we get through 29.60 on the S&P 500, we would then be looking at 29.80, because we just, play through our 80 handle rule. We got to get through those 29.80s, and then we go on to 3,000. At 3,080, 3,000.80, that would be plus 10% on the low that we made in June at our swing low at 27.28. At 3,012, 3012, that would be times 2 the distance from the low to the takeout here of the 50-day. I'm pointing back over here down at the bottom of the chart. This takeout on June 7th, when we finally took out the 50-day simple moving average and closed above it. If you take it from the low that we made to this takeout point of the 50-day and doubled that whole range up, you would get us to 3012. So those would be the first two targets we would be looking for on a new all-time high, by way of making it through 29.60 to 65, 29.80 to 85 for our 80 handle rule playthrough, which we always see happen. Okay, I hope that this video got you caught up on where we are at and prepared as we get into the day on Monday. Basically, we're looking for 28.92. Are we going to trade above it and finally close above it? Are we going to pull back and back test our 50-day simple moving average? And our low so far, after breaking out above the 50-day, has been back here at 28.74, and that was last week's low altogether. Okay, have a great rest of your weekend, and we'll see you Sunday when futures open.